build an 800 credit score, we must begin with a strong foundation. Before we can do that, you can get a free credit report from... Hello there, welcome back to our channel. Today, we are diving into an exciting topic that can make a massive difference in your financial life. Building an 800 credit score at zero cost and save you hundreds of thousands of mortgage interest payments when you use others, people's money or bank to build you generational wealth. I will detail how you can build an 800 plus credit score like myself, so all the financial institutions love to have you as their client, and how easier it gets when you work with any financial institution. If you are new here, please consider subscribing and turning on notification bell so you won't miss any of my future video. My name is Korianne and I'm excited to share more of my real estate investment journey with you today. Having worked in the mortgage industry and helped a lot of my clients with credit challenges to approve for a mortgage, I have witnessed firsthand how credit score can significantly impact interest rates and mortgage opportunity. Let me paint you a clear picture for you. A client with 800 credit score may qualify for 30-year fixed mortgage at 5.5% with a 20% down payment on the $500,000 home. But with an 800 plus credit score, the same down payment and purchase price, they would secure a lower interest rate at 5%. So stay to the end to see how much you can save on the interest payment over the life of the mortgage. Let's get started. First, we need to understand how credit scores are typically calculated by credit bureaus using Pacific score modelings, with the most common one being a FICO score. While the exact formulas for calculating credit score are proprietary and may vary slightly between different credit bureaus, the general breakdown of the factor that influence your credit score includes payment history, that is 35%. This is the most significant factor in determining your credit score. It reflects how consistency you make on-time payments on your credit accounts such as credit cards, loans, mortgages. Late payments or default and any significant impact your score. You need to check if you have any late payment like 30 days, 60 days or 90 days late. The longer the late payments period, the worse it will reduce your credit score. Second, if any of these late payments are administrative errors, then you need to contact the credit company to correct them. Late payments can stay on your credit report for up to 7 years from the date they was first reported as late. The impact of late payments on your credit score lessens over time, but they can still have the negative effect on your credit worthiness during that period. It's essential to make on-time payments and build a positive payment history to improve your score over time. You can set up automated payments from your checking accounts monthly so that you will always pay on time. The second biggest one is called credit utilization, 30%. This factor measures the percentage of your available credit that you are currently using. Keeping your credit card balance low relatively to your credit limits is essential for a higher score. Let's say you have 2 credit cards. Credit card A, credit limit about $1,000. The current balance is $300,000. The credit card B, credit limit is $2,000. Current balance is $500. To calculate your credit utilization, add up the current balance on both credit cards and divide it by the total credit limits. Your total current balance is about $300 plus $500 is $800. Your total credit limit is $1,000 plus $2,000 is $3,000. So credit utilization will be total current balance divided by total credit limit times 100. So your credit utilization come out to be at 26.67%. In this example, your credit utilization 26.67%, which is below the recommended threshold of 30%. The lower credit utilization credit generally indicate responsible credit management, which can positively impact your credit score. The next is the length of credit history is 15%. The length of time you have having credit account impacts your score. The longer credit history tend to improve your score, assuming you have a positive payment history. As I remember back when I helped first-time home buyer for their loan, some lender will require you to have at least 3 open credit accounts with a minimum of 24 months length. Even if you do not use those credit cards, do not close them. Keep them open so you can earn the length of credit history rating. To maintain my credit score of 800 plus, I personally keep 3 credit cards that I've had for over a decade. Coupled with the Silver mortgages boosting a history of 15 plus years, my credit profile has remained solid for the last 2 decades. The fourth one is credit mix of 10%. Having a diverse mix of credit accounts, such as credit cards, installment loan, and mortgages, can positively impact your credit score. However, it's not advisable to open new accounts solely to improve this factor. That means if you have a few credit cards already, then do not open more of them. The last one is a new credit inquiries is 10%. Each time you apply for a new credit, a high inquiry is generated on your credit report. Too many inquiries within a short period of time can lower your score, as it may indicate a higher credit risk. When you apply for a mortgage loan and lender notice recent inquiries on your credit report, they may raise questions about them. This is something my client experienced when they apply for the mortgage through my company. Now you understand the exact formulas on how the credit agency calculate the credit score. You can use this formula to build 800 plus credit score. The next step is to maintain this high 800 score forever. Step number 1, creating a solid foundation. To build an 800 credit score, we must begin with a strong foundation. Before we can do that, you can get a free credit report from this 2 companies. It's called creditkarma.com, and the second one is called annualcreditreport.com. You look through your credit thoroughly to make sure all the 5 areas discussed earlier in this video are staying within the limit of credit formula. Step number 2, utilizing credit responsibly. Understanding how credit works is crucial. The importance of timely payments and how to avoid common credit mistakes that can impact your score negatively. Avoid late payments, period. No matter what, because it took up 35% of your credit rating. Step number 3, smart credit management. From time to time, you want to check on your credit report to make sure that you have diversifying your credit accounts and strategically apply for new credit if need to. Step number 4, monitoring and maintenance. Once you reach your 800 credit score, you will need to maintain it. You can use creditkarma.com as a free monitoring tool, setting up alert and stay vigilant against potential threat to your credits. Step number 5, sealing against identity theft. Some of my clients had identity theft. Their credit score dropped without their knowing it until they apply for a mortgage. Identity theft can cause a big issue on your credit score. So it's crucial to be vigilant. Regularly monitoring your account can help. And if necessary, you can take the extra step of freezing your credit. When you freeze your credit, you essentially lock your credit account, preventing anyone, include potential identity thieves, from performing a hard inquiry on your credit. To unfreeze your credit, you can pay for a small monthly fee to a credit bureaus. One option to freeze your credit score from TransUnion and Equifax without any fee is through creditkarma.com, directly on their website. However, please note that they don't offer the option to freeze experience. So staying proactive and using available tools can safeguard your credit from potential identity theft risk. Next is bonus. As I promised earlier, how you can save hundreds of thousands on interest paid. Let's do some math to see the real impact of the bad credit score. I will calculate the monthly mortgage payment on the $400,000 loan with a 5.5% interest rate for 30-year fixed, and then compare it with the payment of 5% interest rate. Remember, 800 plus credit score, you will qualify for the lower rate of 5%. The difference will surprise you. With the credit score of 700, the total interest rate for the life of the loan is $417,000. I round it up. With the credit score 800 plus, on the other hand, that number dropped to $373,000. That is a saving of $44,593. What if you use bank money as leverage to build your cash flow portfolio to invest in 10 residential cash flow projects? You can save $440,000. That's significant saving when you have 800 plus credit score. I personally have saved a lot on total interest payment in the last 20 years because I have used the leverage to scale our real estate portfolio at the lowest interest rate from banks and credit union banks. Congratulations! You now have the comprehensive plan to achieve 800 plus credit score at zero cost. Remember, with dedication and this proven strategy, you can unlock better financial opportunity and save big on interest rate. If you enjoyed this video and found it valuable, don't forget to give it a thumb up and subscribe to our channel for more cash flow real estate and personal finance. And as always, share your thoughts and questions in the comment below. I am here to help. Thanks for watching and stay financially savvy. Let's learn, invest, and make an impact. Ciao!